Bernard, you were in front of Irish lawmakers saying this very thing. How do you navigate these sorts of geopolitical waters as a leader of a bank?
Well, Caroline, thank you. I think the issue that we were talking about in front of the Oireachtas was that the Irish economy is doing well and the fundamentals of that economy are strong. So as a large player in the marketplace, we see the domestic situation is very strong and the risks are therefore coming from what is happening external to the economy. It's a small open economy and it's capable of being put off beam, if you like, by external events. And issues such as Brexit and issues such as, trade wars and rising tensions around those sort of traditional issues can present risks. And really what we're saying is you have to accept those things. They're there. Our job is to continue to run the bank as efficiently as we can in an economy that's doing well. And relative to others, I suppose our business is reasonably simple from that point of view. We're quite focused on the Irish economy and therefore we're able to manage that pretty well. But we're also cognizant of the fact that these risks exist and we have to help our customers position themselves to deal with those risks.
How do you prepare when you have such an uncertainty such as Brexit and indeed Ireland so caught up in it in terms of the Irish border?
Yeah, so we have 26 Brexit advisors based around the business.
Wow.
And it's a big issue for us because it's a big issue for our customers. And the main thing we do in talking to the customers, particularly smaller SMEs, is say we can't tell you what Brexit's going to look like exactly, but you're going to need to be more competitive. You will never regret becoming more competitive, and you're either going to be trading into a UK economy where you might have a bigger disadvantage than you have at the moment because of a tariff issue or complications in your supply chain, or else you're going to be trying to trade into a new marketplace where you haven't been before and price will matter. So being more competitive, investing in your business now, you won't regret it. So that's the general approach we would take.
Let's talk about you becoming more competitive and investing in your business. AIB has become a bit of a tech leader to a certain extent.
Yeah, I mean, a number of years ago, we saw that we were inevitably heading in this direction, that it was going to be important to establish the right fundamentals in the business to allow us to engage digitally with our customers, because that's where customers want to be. So we took the time to invest across data and customer engagement, and now mobile, clearly the busiest channel, 62% of all our customers active on mobile, which means every month they're engaging with us more through mobile than anything else. So that's really positive. It helps us and it helps the customers.
What about your shareholders? I'm looking at the moment at how much the US banking sector in particular is outperforming when it comes to a value basis versus European banks. European banks, many of them trading below book value. When you're looking at share prices, when you're looking at the government being a large shareholder, but also now you've been in the public markets again for a year. It was almost a year ago that you IPO'd, well, there or thereabouts. Can you remain as competitive as you want to be when you're being answerable on a quarterly basis?
So I think, as you say, it's a year since we listed. The key for us was to make sure we delivered against those expectations. And I think from the statements we've had out there and the publication of results with another set coming up, you can see that the evidence from history is that we have been delivering against those. And it is hard. You have to be competitive. You have to be focused on delivering against the investor expectation and against a customer expectation, which keeps changing because of what they experience from other companies. So there are challenges with it, but as I say, strong economy and very clear focus on the customer and delivering simply and efficiently does help. So
where are we in the cycle? It was interesting that Conor O'Kelly, the National Treasury Management Agency CEO over in Ireland, was saying, look, there is material risk that bank shares are going to drop down because we're coming to the tail end of the cycle. Do you see that as a risk? Perhaps it's not one you have to think about too much because you're more about the business than the share price.
Yeah, I mean, fundamentally, it's our job to manage the business and to position it as well as possible in the marketplace that exists. I think what the comments that have been made by the NTMA and by others are basically saying, listen, we've had a good run of equities for a period of time. Don't always assume it's going to be thus. So these things can change, and the Irish economy is very positively perceived. That's also good. So, these are not bad times to think about equity disposals, I think was the commentary. You could see that. And as, we've commented, the business has done well in the last 12 months. We're quite happy with the performance from a market point of view and the level of investor interest. Those things do change over time.
So perhaps more government selling off of its shareholdings into the market. What about the regulatory environment in general? What about holding of capital? What about how the ECB is looking over European banks? Where do you see it?
Yeah. Well, I mean, fundamentally, any share sale is for the minister, and he'll decide. Any issues around capital and regulation, obviously, we've been through a period where the SSM has been establishing itself for the last number of years and positions. There's going to be quite a few personnel changes that are taking place across the ECB and across the SSM as well. So the next 5 years will present different challenges. I think a lot of the new regulation has come into existence. Much of it is embedded at this point, but there's more to be done. So the next 5 years are probably going to be a different phase of the journey than the 5 we've been through. And then if you look at it from a competitor point of view, obviously tech companies and payment disintermediation is obviously a feature. But a lot of those industries are facing their own challenges now as they mature and as they move on to regulators and supervisors sort of screens themselves. So I think the next 5 to 10 years is going to see lots of different things than the previous 5 to 10 years. And I think the shape of competition and the shape of technology versus traditional banking will be different. But I think there's a strong role for a reasonably tech efficient player to operate.